A warm welcome to you, my dear children. Today, with business and accounting studies, with our subject, we move on to a new unit, a new lesson, that is prime entry books. Prime entry books. This is the unit 7, seventh lesson in your textbook, in your syllabus, prime entry books. New lesson, right? First, we'll check out what we have to learn in this unit. The breakdown of subtopics. So, as you can see, children, we have the following subtopics, facts, to be discussed in this chapter. First subtopic, what do we have? We have the introduction to prime entry books. Introduction to prime entry books. Now, it says prime entry books. It says books. So, it's obvious that we are going to learn about some books. Books, it can be various types of books which are used in accounting, right? It can be things that you haven't heard of. It can be things that you don't know. But no worries, we are going to learn about these books. So, prime entry books. Prime entry books. We are going to learn what prime entry books are. Right? Simple things. No worries. These are not very complex things. It's just a set of books which are used in accounting. 7.2, that means the next subtopic, we are going to learn about the necessity of prime entry books. Why are they necessary? What is the reason? Why do we use them? What is the use of prime entry books? What the role of prime entry books in accounting? What the role is. You're going to learn what is the role of prime entry books in accounting. The necessity, the importance. So, then we get something new again. Source documents. Source documents. Well, these things, I'm sure that some of you may have heard, but some of you may have not. New. Most of you are finding these things new, which means you don't know, you haven't heard these things. Source documents. But just like before, I'm going to draw your attention to this word, documents. Source documents, which means it's obviously it should be something to do with documents. It must be something related to documents. Previously it was books. That's why I told you, obviously it must be some sort of books. You get that idea in your head and you get some pictures about books and you wonder what these books are. Well, soon you're going to learn what these books are. Likewise, soon you're going to learn what these documents are. Some sort of documents used in accounting. Let's learn. No worries. Then we are going to learn finally what is the use of these documents. What is the use of source documents? Why are they important in accounting? For what do we use them in accounting? Yeah? These things you're going to learn in this unit, the unit 7. And it's a short unit. Let's make it fun. Right, children? So, prime entry books in accounting. So, let's see what these prime entry books are. We have this question on the screen. What are prime entry books? What are prime entry books? Well, children, you can clearly see what the pictures are showing you. The pictures show, in both the pictures, a set of books. Right? And there is another word, another name on screen. In this picture, they have mentioned subsidiary books. And that is another name. Yeah, now we started with prime entry books. Now there's another name, subsidiary books. What are all these books? What are these? Well, children, it is nothing special, nothing new. You have already seen these books and how the books are used in a business. Just think of a moment that you went to a shop. Think of a moment that you went to a shop. I'm not talking about supermarkets and these large scale shops. I'm talking about these roadside small retail shops. Maybe the shop in the junction. You call it handiye kade. Handiye kade. Right? Or those small boutiques. Retail shops, groceries, pharmacies, hardware shop, small businesses which are always seen in every town, both sides of the road, main road. You have gone to these businesses, right? In those businesses, most of the time you don't have self-service. You don't get to have a cart and push the cart and go around the shop shopping for the goods that you like. You don't get those facilities in those small shops, do you? No, you don't get the self-service facility. No. Most of the time when you go to these shops, there's a modalali, the shopkeeper. You ask for the goods from the modalali. You ask him. You tell him, modalali, mata denna biscuit packet එක, මට මාරි packet එක, Nestamol packet එක, මට දෙන්න chocolate එකක්. That's how you go and get the goods that you want. You don't get to push a cart and go around. No, not in these small shops. But in these small shops, you might have seen this thing, these books that we are talking about. Remember when you asked for the goods from the Mudalali? Mudalali gives you the goods and he adds up your the value of the goods, the prices, and tell you the total. එතකොට මහත්තයා මෙතන 650යි. Something like that. He will tell you the total that you have to pay. And when you pay the amount, he takes the amount and he puts the money to his drawer, and he takes the balance and he gives you the balance, and he will offer you the goods in a grocery bag. He will give you the goods, all the goods put in a shopping bag. Soon after your goods are delivered, handed over to you, he puts a small note in a book. He writes the total amount in a small book that he has on his table. Books. That is what we are going to talk. That is what we are going to talk about today in this lesson. Prime entry books. See children, these are the books which these shopkeepers, the modalalis, they keep on their desks, on their tables, to write down every amount, every value, every sale, every transaction which is done during the day. They just write down. It's a small book. They just get the book and they turn to the page and they write the amount and they just put away the book. That's it. When another transaction occurs, again he gets the book, he opens the book and he goes to the page and he writes the amount and keeps it back. Again, when a transaction occurs, again he searches for the book. Oh yeah, he takes, writes, puts it away. Or sometimes the book is always open on the table. The book. These are the books that we are talking about. Prime entry books. Right? So, if you got an idea about what we are going to talk about, what we are going to discuss, we'll come up with a definition, shall we? Yeah. Now you know what these books are, right? And most of you people, most of you students, you may have seen even how these books are lying around the desks or beside the cashier of these small shops, these grocery shops and these small shops. These books are always on the cashier, on the table, or mudalari's table. Yes. So the definition, usually children, it comes out like this. What are prime entry books? Prime entry books are a set of prime entry books are the set of books in which transactions are recorded. Transactions are recorded at first. Recorded at first. Yeah? The set of books in which the transactions are recorded at first. Then and there, when the transactions occur, when the transactions happen, soon as the mudalali, when he gives the goods to you, and he takes the money and he writes that amount in that prime entry book. So then and there, at the point of the transaction, every time a transaction happens, it is recorded. It is recorded right there. You got it? So before, I'm writing this word, before, and I'm asking you a question now. Before what? Before what? I wrote the word before. Before what? Well, students who watched the previous sessions and how the previous lessons were done and what were done in the previous lessons, those students, you, my dear children, you must remember that I myself, when doing the previous previous unit, chapter 6 and chapter 5, I told you that every transaction that occurs in a business must be recorded in ledger accounts as a double entry. You must remember this. You must remember this. I know that you remember this. I told you that every transaction that occurs in a business must be recorded in the ledger accounts. In the ledger. According to the double entry system. Every transaction has a dual impact. Every transaction has a dual impact. Dual, double, dual impact. When a transaction occurs, let's take an example transaction. Let's say that sold goods worth of 1,500 on credit. Let's take that transaction. Goods were sold worth of 1,500 on credit without taking money, without paying. The customer took the goods, but we didn't get the money. So it's a credit transaction. It's a credit transaction. That transaction we'll take as an example. What effect does that transaction have? What effect does it have? What impact does it have on the business assets, on the business liabilities? I told you that every transaction, like that transaction, each and every transaction has a dual impact. Two effects. Something increases in the business. At the same time, due to the transaction, something increases and something decreases. Or something increases and the other thing also increases. Or something decreases and the other thing also decreases because of every transaction. I have taught you, you have learned these things, children. Then when I gave you the transaction, goods sold on credit worth of 1,500, goods go out, goods are sold, right? Goods are sold. A customer takes the goods from the business. So the goods that the business has decreased because of the transaction. That is one effect. Goods decrease. Right? If the customer paid for the goods, if he paid cash 1,500 then and there, although the goods went out, cash came in, so cash increases. Goods went out, so goods decreased, but cash increased. That is the dual impact. We have learned about these things. Yeah? If the transaction was done on credit, if the customer did not pay cash then and there, although the goods decreased, cash doesn't come to the business. No cash coming into the business. So although the goods decrease, cash doesn't increase. Then what? Then no dual impact. There is a dual impact. Every transaction has a dual impact. Goods decrease because the customer didn't pay. He owes us now, so he becomes a debtor. We get a new debtor to our business. So debtors increase. Goods decrease, that's because the goods were sold. And debtors increase, that's because the customer becomes a debtor because of that transaction. We get a new debtor to our business. That is a dual impact. One decreases, the other increases. Or both decreases or both increases. These things are recorded in ledger accounts as a double entry. We did a lot of ledger accounts. So when transactions are recorded in ledger accounts, what is the need of prime entry books? What are these books? What do we use them for? For what do we use them? Children, get this to your heads right now. Prime entry books are the set of books in which transactions are recorded at first. at first. Get this, at first. Make it clear right now. At first. Because when a transaction happens, children, the mudalali or the bookkeeper of the business, then and there, they cannot open these ledgers and they cannot record the transaction as a double entry, searching for the relevant accounts and entering the transaction. Then and there, in a business, when a lot of transactions occur, when a lot of customers are waiting, searching for accounts and drawing accounts and recording double entries is not possible. It's not practical. So what the mudalali or the bookkeeper or the whoever the business has to record the transactions, if it is a sole tradership, the mudalali himself, he quickly records this amount only in a book. Then and there, when the transaction occurs, then he can attend to the next customer without searching for accounts and without saying, "Oh, sir, I can't attend to you. I can't give you the goods right now. I have to record the previous transaction in my books. So where is the sales account? Where is the cash account?" No, it's not practical. It's not practical. It's simply not practical. So searching for accounts and recording in double entry accounts is not practical then and there when a transaction happens. That's why these books are kept, prime entry books. Alright, so that is the true, the real scenario, the practical scenario that happens in a business which is having customers, which is having a lot of business every day. All right, that is the practical scenario. So these books are kept in order to record every transaction then and there in a very rough manner. Okay, so just because these books are used on a daily basis, these books are also called day books. Day books. Just because they are used daily, every day in a business. Day books. Right. So that is the basic explanation which should be given, which you should understand, the idea you should have in your heads, right, regarding these books. So when I wrote this word before, I asked you, before what? When I wrote before here, I asked you, before what? Before the transactions, are entered in the ledger. Before that, before the transactions are entered in the ledger. Before the transactions are entered in the ledger. That is where the prime entry books come into play. That is where the prime entry books become useful for a business. Because when the transactions are entered into ledger accounts, you refer to the prime entry books. You take the transactions from the prime entry books to the ledger accounts. Yeah, because directly every time a transaction happens, the transactions cannot be recorded in ledger accounts. The dalalis or the bookkeepers, they can't draw accounts and record the transactions when the customers are waiting, when there are more customers. They have to look after the business. They can't be, get they can't be getting involved with the accounts, right? Business operations, the business must be carried out, the customers must be attended to. That's why the transactions are going to these books. So as you can see, children, the books are various, right? See, 1, 2, 3, like different books in different colors. It's easy to keep separate books for different types of transactions. Okay, so the transactions, when they are recorded in the books, the same type of transactions are always recorded in the same book. The different types of transactions, when a different type of transaction occur, when a different type of transaction occur, it is recorded in a separate book. Example, sales are recorded in a different book, purchases are recorded in a different book. Well, let's find out how the transactions are recorded in which books. What are the main prime entry books? Here you go, children. This page is from the textbook, and this table is in your textbook. It shows the main prime entry books, the types of prime entry books, different prime entry books. All right. First, we have the cash book. All right, first, cash book. So when somebody says cash book, you can of course understand what transactions are recorded in the cash book. Do you record credit transactions, Naya? Without cash, when a transaction occurs, when a customer buys on credit, do you record in this? No, it's the cash book. You record the cash transactions only, not the credit transactions. Okay, Naya? No, it doesn't go to this book. This book has only the cash transactions. Get it? Cash book has cash transactions. It's simple. Let's see what the explanation is. It says transactions related to the receivings and payings of cash goes to this book. Transactions related to receiving and paying. Receiving and paying, like receipts and payments of cash. Let's say you pay an electricity bill, cash transaction. Cash goes out. To pay the electricity bill, you have to spend cash. You have to pay. So that is a cash transaction. Cash goes out. It's a cash payment. It goes to this book, cash book. Yeah. Let's say you pay the salary of an employee. It's a payment. Cash goes out. Cash expense. It's a cash payment, so goes to this book. Should be recorded in the cash book. Let's say you sell goods. You sell a stock of goods. A stock of goods go out from the business, all right? But the customer pays the cash, so cash comes in. That is also a cash transaction. It's a cash receipt. Receiving. You say receipt. Receipt. That's also a cash transaction. So it goes to this. Likewise, simple. All the cash transactions should be recorded in this. All these amounts spent and all these amounts received should be recorded in this book. Okay. Cash book. Next we have what? That is the second prime entry book. Yeah. This one, bank account. What do you think that businesses record in the bank account? What do you think? What type of transactions go to this book or the account? Bank account. If you want, you can say bank book. It doesn't matter. Bank account or bank book. What type of transactions go to this? What type of transactions? Check transactions. Well, when you look at the description, it says transactions carried out through the bank current account. What transactions are carried out through the current account? Check transactions. Most of the businesses have current accounts. Current accounts give you the facility of checks. Checks. And when a check is received, you don't put it to the cash book. You don't put that amount, the check that you received, you don't put it to the cash book. You put it to the bank book because it's a check. It's a bank transaction. Check goes to the bank. When you buy a check, when you pay using a check, you write a check to somebody. You write a check, and you sign it, and you pay. You pay using the check. It's a bank transaction. It is related to the bank. The check goes to the bank. Money in the bank. Cash at bank. So the increasings and decreasings, okay, increasings and decreasings of cash at bank. The transactions you use using checks. Transactions done using checks. Goes to this. Yeah. Next we have what? Next we have the petty cash book. Petty cash book. Don't say petty cash, alright? That is not the correct pronunciation. It's petty cash, not petty cash. Petty. Petty cash book. Well, there is a cash book, and we already learned that all the cash transactions are recorded in the cash book. What is the necessity, the need of another cash book? And that is named as petty cash book. What is that? It says here, petty cash transactions. So what are recorded in the petty cash book? Petty cash transactions. And you wonder, petty cash transactions. What are petty cash transactions? Children, petty cash transactions are the small daily payments which a business incur, which a business, every business has. The small daily payments, like small amounts, unconsiderable amounts. I'll give you a quick example. Let's say you have a laborer working in your hardware. He's a loader. He who unloads cement bags and the concrete blocks and everything, and loads to lorries. He's a laborer, and he comes and asks for 50 rupees to have a tea. You can't say no. He's working for you. He's shedding his sweat for you, and he's working hard. Physical laborers. He's asking for 50 rupees. You say, no, I can't give you 50 because I can't enter that amount into books. I have to enter every transaction into books. No tea for you. Well, you can't say that. You have to give him that 50 rupees. You give him that 50 rupees and you enter that in the petty cash book, because it's a very small transaction, very small cash amount. It's not necessary to record the small unconsiderable transactions like that in this. There is, it is not, actually it is not needed. It is not necessary to record those type of small transactions in this, in the cash book. Yes, they are cash transactions, but not entered in the cash book. They are entered in the petty cash book. Petty cash book. Small daily payments in a business entered in the petty cash book. Right, so 3 books now, up to now. Okay, cash transactions, all the cash receivings and payments, cash goes to cash book. Checks received and checks paid, check transactions, bank related transactions go to bank book, and small daily unconsiderable small cash transactions go to petty cash book. Okay, what do we have next? We have something new. Journal. It must be something new. Have you heard of journals? It says purchasers journal. Well, if you don't know this name, I'll give you this name. It is also called the purchasers daybook. Purchasers daybook. All the credit purchases. What does it provide? What is provided to you? What is the detail provided to you? It says purchases of trading goods on credit. Purchasing simply means buying. When you buy stocks of goods, boxes of let's say you are running if you are running a grocery shop, you are buying biscuits and cheese and butter and chocolates and stuff, goods from the suppliers. Let's say you bought a box of chocolates from Ritzbury, okay, and another box of biscuits, Marie biscuits from Munchie, and another a box of cream cracker biscuits, and that stock you bought from the supplier, right? A box of chocolates and a box of Marie biscuits and a box of cream cracker biscuits. All the goods bought to be resold. I mean, you need goods to sell to your customers. Those goods you purchase, you buy from suppliers, right? The supplier is let's say the Munchie company. You say this bill, this amount, I'll pay next week. When the lorry comes around next week, for these goods I will pay the next time you come around. The next time you come. Okay, let me sell the goods first. After I sell the goods, I'll pay you. That's how the most retailers, that's how most of the grocery shop owners, the retail shop owners do business. They do not pay to the supplier then and there. They say, let me sell the goods and pay you. Okay, because the goods are yours and I'm buying, of course, I'm purchasing from you, but I can't pay you, I will sell them and pay you. That's how most of the small retailers do business. So these purchases are done on credit. Those purchases go to this book. Purchases day book. On a daily basis, these shop owners buy a lot of goods from a lot of suppliers. All those credit purchases goes to the purchases book. Or you can call it the purchases journal. It doesn't matter. Credit purchases of trading goods. Right. Then children, then we have another journal that is the sales journal. That is the sales journal. Now, by now you know what transactions are recorded in the purchases journal. So you can guess what transactions are recorded in the sales journal. Yeah, selling of goods. When goods are purchased, you bring the goods to your shop and you display the goods on your shelves, and you wait for customers. When the customers come, you say, කොහොමද අද මොනවද බැලුවේ? Yeah, you ask the question. And when the customer tells you what he needs or what she needs, you provide the goods. And if he or she says, මගාව අද නම් මේ සල්ලි නේ, I can't pay you today, මුදලාලි. Shall I pay you after 2 days? දවස් දෙකකින් සල්ලි දෙන්න. This is the real scenario. This is the practical scenario. In reality, this happens in reality. When customers tell you that they can't pay, they don't have money, you have to, most of the time, children, you have to sell the goods on credit. Okay? Well, a lot of customers pay then and there, but there are customers, regular customers in a village, in your hometown. These people might be known. Maybe this person is your neighbor's son, neighbor's daughter. He comes and he says, "Uncle, I want a Mari, a packet of Mari. Ammi will pay you later." Ammi kiwa heta sali denna කියලා. You can say, I'm not going to sell goods without money. You go and bring the money. You can't say that. It's not good for your business. These are practical things. So you sell goods sometimes on credit. Those transactions goes to this. Selling of trading goods on credit goes to this. Not cash sales, children, not cash sales. Cash sales does not go to the sales journal. Sales journal or sales day book. Sales day book. Selling of, otherwise you can say sales of credit. Credit sales of goods should be recorded in sales day book. Right, so that's that. Finally, we have the general journal. General journal. The general journal. General journal. It's general. The name itself says general. Well, it means, children, there is no specific transaction to be recorded in this. There is no one specific transaction. There are many transactions, like many transactions. The detail, there is no detailed explanation. It says other transactions. I'll give you a better explanation. Listen to this. General journal is used just like a garbage bin, or just like the dustbin in your classroom. Every other thing, every transaction which cannot be recorded in these other books, all those things goes to this general journal, right? Let's say the things you can't put in your pencil box, the things you can't put in your school bag, the things you can't put in your handbag, the things that you can't put in your teacher's table, drawers and cupboards, all those things you put to the garbage bin. So not garbage, not rubbish, I'm talking about transactions. Transactions which cannot be recorded in these other books goes to this book, general journal, right? So in a later date, in a later session, we are going to learn about all these journals, all these books, one by one. One by one. One by one. No worries. This is just an introduction, children. How many books do we have? 6. We have 6 books altogether. 6 books to learn about. All right? Moving on. And in this slide, it says that the uses of primary books, the importance of primary books. That is something that you should remember. These things are things that you should remember. You should. Okay. I can point out on, like, when we start to do past paper questions, there are several questions usually coming from primary books. Every year, several questions have come from primary books. The use of primary books, the importance of primary books. So, up to you to remember these things. Let's see what these things are. Why primary books are used in a business? Why? First, similar type of transactions of a period need to be classified and recorded. Similar types of transactions of a period need to be classified and recorded. Now, you know, children, when transactions occur, there are various transactions. All the transactions are not recorded in the same book. Well, it will be an utter mess, right? If all the transactions are jumbled in one book, and if you open that book, you will not be able to sort out which is which, right? This book will be like a So, you know already that different types of transactions are recorded in different books. Cash transactions going to cash book, bank transactions going to bank book, purchasing goods on credit are recorded in purchases book, selling goods on credit are recorded in the sales book, sales journal. So, different types of transactions can be separately recorded in the relevant book. That is important. That is very important, isn't it? But think practically. It's very important. It makes the business transactions and recording of transactions and everything very organized. When transactions are separated, looking at the nature of the transaction, like different transactions, when they are recorded in different separate books, it's very easy, it's very organized. Yeah. So different transactions of a period, let's say in a month, they are classified and recorded. So important. That is one use. Second use, posting transactions to the ledger becomes systematical and convenient after recording them in prime books. I told you, right? I told you this. Told you, right? Then and there, when transactions occur in a normal day in your business, you can't open the ledger book and draw ledger accounts and record double entries. Then and there, the customers will scold you, will blackguard you, and they will go to another shop. They will say, "May Mudalali, you until you record the transactions in your accounts, we can't wait." That's what's going to happen. So first of all, when the transactions are occurring, you record the transactions in the prime books, like a very, very quick note. You just write the amount and you put the book away and you attend to the customers. In that way, children, the prime entry books, the usage of prime entry books is it's making the business very systematic. That's why it says posting transactions to ledger becomes systematical and easy. You can later, like after the business is closed down, when the roller gate is closed at 6 o'clock in the evening, you can have a tea and have a wash and Mudalali, relaxed. At leisure, then he takes the ledger book. Then he goes to the ledger accounts and refers to the prime entry books which he uses in the business, in the shop. And then he refers to the prime entry books. Then he looks at the cash book. Then he is able to, he can very easily know what transactions, cash transactions have happened. What transactions, what cash transactions have happened. How much of cash received, how much of cash paid. And then he can get an idea about the day's operations. Right? These are very practical, children. These things actually happen. Yeah? Then looking at the prime entry book, looking at the cash book, he can record the cash transactions in the cash account, the ledger. He can put the double entries to the ledger. Yeah? At leisure, like in the evening after the shop is closed. Do you get a picture of how the transactions, how the bookkeeping is done? Yes, children. This is the real scenario. Okay. So it says posting transactions to the ledger accounts becomes systematical and easy. Convenient means easy. Okay. After they are recorded in the prime entry books. Yeah. Next use, responsibility of preparing each prime entry book can be assigned distinctly to various individuals. Distinctly to various individuals. And accordingly, the business could minimize errors and frauds. Well, it's a small, if it is a small retail shop, children, like a grocery shop or a petti kade, handiya kade, likewise a small retail shop, if that is the case, there will be no separate bookkeeper or accountant. There will be no staff in the shop. Most of the time only the Mudalali is there. He who records the transactions then and there in the prime entry books. Okay. But if it is a slightly bigger, larger business, separate individuals can be kept to maintain separate books, different books. They can be given the responsibility of maintaining the set of books. There is a separate individual to maintain the cash book. Well, that can be done. There is a separate individual to look after the purchases of the business. So the purchases day book is with him. That becomes, that makes the business operations easier and minimize the errors and frauds. Frauds. Do you know frauds? I will mark it with red. Frauds, children, frauds. Your employees or your own staff, workers, sometimes can, steal from you. These things happen. They can do misleading things and lies, and they can you know what I'm saying, right? They can cheat you and take the business money. They can cheat and business cash, business incomes can be taken by these type of individuals. Those frauds and misleading cheatings can be minimized if each book is maintained by an individual. That is what this point says. That is also an importance of prime entry books, keeping prime entry books. Next, we have, it is easy to maintain ledger because total of prime entry books are posted to the ledger. It's something like this, children. It's easy to maintain the ledger because the totals of prime entry books are posted to the ledger. It's something like this. When a month ends, like 31st of, let's say 31st of August, all the prime entry books are taken and they are totaled. You sum up all the prime books, and you take the month end sum to the ledger accounts. That also makes preparing the ledger accounts easier. Right? So it is easy to maintain ledger because the total of prime entry books are posted to the ledger at the end of a month. last but not least, minimizes the occurrence of accounting errors. Again, the same similar point to this one. Yeah, this point, the last point, is similar to this one. It can minimize the occurrence of errors. Even though errors occur, it's easy to trace out errors when you have a set of prime entry books, different books for different transactions. It's very easy to trace out errors, and errors occur very rarely. Errors occur, but it's minimized. Okay, errors are minimized by the prime entry books. There you go, children, the importance of prime entry books, or why prime entry books are used in a business, right? At least try to remember 3 or 4. You will find it important, you will find it useful in your exam, right? You get what I'm saying? Likewise, children, now we know, we have a basic idea, you all have a basic idea what these prime entry books are and why they are used in a business. Why they are used in a business. But in this screen, when we end this this content, there is another thing that is coming later on. It says information of the transactions are obtained from source documents, right? Yeah, I want you to pay attention on that. Source documents. When we started the lesson, children, I told you that we have to learn about this set of books, prime entry books, and we took an introduction. We got an introduction about prime entry books. Then the necessity of prime entry books also. We learned the necessity or the use of prime entry books. That also we learned. This is the next thing that we have to learn, source documents. That's why I brought your attention on this. That's what we are going to learn next. In order to prepare prime entry books, in order to record transactions in prime entry books, children, there is something that businesses need. Okay, those are called source documents. That you are going to learn in the next session. So with this knowledge, we will move on and learn about source documents. So hope to see you soon, children, with the next part of this lesson, chapter 2 of Unit 7. Thank you very much. See you soon.